I think precious metals will outperform real estate and stocks. And probably to a certain extent, Bitcoin and cryptos will be able to outperform gold and the precious metal sector.
Physical silver and gold in your hands. Personal service, competitive prices, and zero complaints. That's Miles Franklin. Call us at 1-800-822-8080 or email us at info@milesfranklin.com. Hey everyone, this is Elijah K. Johnson with the Miles Franklin Market Update. And back with us today is Florian Grummes from Midas Touch Consulting. Florian, thank you so much for joining us today.
Thanks, Elias, for having me. It's a pleasure.
Definitely. It's great to have you. And I love how you pronounced my name, Elias. That's the Latin version, or the Spanish version actually as well. And I love that translation. I'm actually Catholic. We use Latin often at Mass. So it's I love that translation. But the first topic I'd like to discuss is the precious metal markets. We're actually seeing quite a big jump today, 2% in both gold and silver, actually more than 2%. And we're seeing a 7-week high for gold, and silver is also quite impressive as well, back above 26. What do you think is driving the prices right now?
Well, from a technical point of view, I think they both are gold and silver had become rather oversold. We've seen a nice double low in gold in March. So I think in the first week of March, gold went down to 1676. Then we've seen a little bounce, and then it came all the way back to 1678, so $2 higher, but still a low, basically in the same range. And since then, a few days before Eastern, basically, a nice bounce started, and here we are now, nearly $100 higher already, or even more than $100. So from a technical perspective, a nice double low in gold. Basically, that's what I guess technically drives this rally. Interestingly, inflation numbers came out. You've seen rising inflation in the States in March. And obviously that's also helpful for gold. So you can make the argument that this 8 months correction in the sector is probably over. And we're now experiencing or seeing the first bounce out of those double lows in gold. And yeah, probably we are still in the larger picture somehow in a bottom building phase. So I wouldn't necessarily expect a massive uptrend right now, but yeah, it's a nice bounce. First target around the 1785 to 1790. That was my first target. That's more or less met today. So maybe we get a little pullback over the next few days, maybe back to 1740-ish, I would say. But from there, I expect another advance towards the 200-day moving average around 1850. And that's the former support that broke somewhere, I think, in February. And so, yeah, I think it's looking pretty good over the next few days and weeks. And I think the worst is behind us in the bigger picture. I think it's a healthy pullback. It was necessary for some people, especially with leverage. Of course, it became rather painful. Also, if you're in the mining stocks, this was a bigger pullback. In gold, it was basically 20% from the top in last August. I think that's normal. That's to be expected, and that's something you can and have to sit through. I think it's looking pretty good. I think we're building this kind of launch pad now. Sentiment has come down quite a lot over the last few months. And basically gold is a contrarian investment again. So it's looking pretty good in the bigger picture, I would say.
And you're saying for the short term, just kind of, we'll probably see more consolidation?
Yeah, I wouldn't be surprised if gold needs a little bit of a breather or a pullback from current levels, or maybe from 1790-ish, I would say, more or less. But it should be just a small one, cool down the short-term, little bit overbought situation, and then, yeah, another advance is what I actually expect.
You talked about the divergence we're seeing between gold and silver prices. A lot of people are talking about this, how during this pullback, we've seen both metals fall, but gold really seems to be in a downtrend while silver seems to just be kind of going sideways. What do you think is causing this divergence?
Well, in the very big picture, first of all, we have to be aware that while gold had been in an uptrend since 2015, from its lows at $1,045, gold had been advancing already 5 years, while silver made its final low basically in March last year in the Corona crash. So that already basically put silver in a better position. And silver had this very strong, nice bounce out of this final low last March, and it went up, I think, 160%. And interestingly enough, it didn't really came down lower than, I think, $21 roundabout. That was kind of the low. And since then, as you said rightly, it basically moved sideways while gold really corrected $400 lower from the top in last August. And I think, I think silver kind of like is smelling this inflationary environment coming up step by step. And it had been very oversold in March last year. So I think it's not a surprise that it has held up a little bit better than gold overall. And it just recently touched its 200-day moving average and is now moving higher again, while gold really moved way below its 200-day moving average. I think silver held up better, and it is certainly also for the next few years, I think it will outperform gold quite a lot.
And with respect to what we're seeing right now, you're saying that we're going to see some consolidation for a little while, but correct me if I'm wrong, you are looking for new highs in both gold and silver coming within about a year, correct? Yes.
I mean, let's be honest. I mean, this big pullback in gold, $400 again, I mean, it's not really big, but $400 is a number. So it will take some work to get gold back towards $2,000 and then above towards 2050 and new all-time highs. That is some work that the bulls will have to do. And this is not going to happen overnight. So I would say let's assume maybe a few months until gold can reach the $2,000 range more or less again, and then it will be overbought. So then it will need to take another pullback, but it will create a higher low. And then at some point it will be ready to break out. And I assume latest by next year. So in the bigger picture and also in the intermarket perspective, I think once Bitcoin reaches an important top, and likely this will happen in the third or in the fourth quarter, right? That's my expectation right now. If that happens, you're going to see a lot of money moving from Bitcoin and the crypto sector into precious metals, because all those people who are now invested in Bitcoin and the other cryptos, they're not going to go back into the fiat money system. So that's actually my expectation, that kind of liquidity and money then will easily drive gold and also silver in the next year to new all-time highs. Yes.
No, we're seeing reports from China, and this is reported on Reuters, that China is importing a lot of gold. They had been, before the pandemic, importing billions of dollars of gold per month. And now they took a little breather. It wasn't that much during the pandemic, but now they're back to importing billions of dollars of gold in April and May. Reports are a bit iffy which it actually is. But anyways, big picture is China is back to importing a lot of gold. So do you think that is going to have a significant impact on the price, China's renewed demand for gold?
It certainly has and will have more in the future. And it has had for the last 15 years a big influence, right? So the Asians in general have always been more kind of a contrarian buyers. So they stepped in buying once prices were low, or at least got beaten lower. So we've seen that also with India recently. I think the gold imports to India have been at a 2-year high in March, while prices basically reached a 1-year low. So that's the typical behavior that you can see from Asian countries, and of course specifically from China and from India. And those two are responsible for more than 50% of the physical gold demand. So this is a very important part of the puzzle. And going forward, yes, it certainly will continue. Of course, at some point when prices will have risen too much and too fast, then they're going to step back and wait. So that's the typical kind of game. Generally, you can also, of course, say that it's been the physical market who basically put in a price floor around this $1,700 in March. And this is also a phenomenon we've seen for many, many years, again and again. The paper market goes crazy on the upside or the downside, does way too much, and then it's the physical market who either brings in a price floor or basically on after a big rally, the physical demand kind of disappears, and then gold has to move lower again. So, yes, it's nothing new, but you're absolutely right. I think physical gold demand from China and from India will push gold higher.
Now, one of the things that you're expecting, not just in the precious metal markets, but in kind of all markets in general and all asset classes, you talk about this crack up boom, where essentially all asset classes are rising. How does an investor navigate that kind of situation? Yeah,
I think it's very important to understand this. I mean, this is my macro takeaway since about a year that we are in a cracker boom. The definition is basically that due to this constant expansion of credit and currency by all central banks all over the world, there's more and more liquidity floating around, and at the same time, more and more people become aware or basically lose the confidence in those fiat currencies, and they're basically looking for safe haven assets or just any asset that can protect them and the purchasing power of their wealth, basically. And this is an ongoing process. This is a process that is accelerating step by step. So this is not something that happens from one day to the other in an extreme fashion, but it's building up. And I think step by step, we're moving towards this kind of like acceleration phase. And I expect that, of course, you will have volatility, but overall, I don't think that stock markets can have a huge crash that will last for months and years. Maybe, yes, a breather for a few weeks can always happen. But I think stocks will move higher. I think your real estate will do well. I think precious metals probably will outperform those other two asset classes. And I think Bitcoin also overall will move higher. And what investors should do is basically stay long. Don't play any crazy games. Don't introduce leverage. Just stay long. Don't freak out about the volatility, and basically sit on your hands and watch how nominally your assets are becoming more and more expensive.
That last point you said, that nominally your assets are becoming more and more expensive, that's kind of the key though, because if everything's rising at the same time, then you kind of have to look at, well, what's rising more? Because that kind of just means there's a lot of inflation, and your real purchasing power, how much you can buy after you sell your investment, is going to be impacted, right? So did your investment actually rise in real value? That's the question. So what are the assets that you are looking at that will actually rise more than other assets so that your purchasing power or the real value is actually increased?
Yeah, it's a very good and important question. I think you can, to a certain extent, preserve your wealth and your purchasing power also with stocks and real estate. But from history, we know that in an inflationary environment, silver used to be the best investment. Now, over the last 10, 12 years, the fastest horse has been Bitcoin. And I assume that it will probably remain so for the foreseeable future, for the next 1-2 years, maybe. But I think that silver will likely outperform most other assets, yes. And gold obviously should also do well and better than most of the stocks. I mean, it's always, if you're a really good stock picker and you find those stocks that will double, triple, quadruple from here in a year, okay, yes, you will do better than gold and silver probably. But that's itself already a very tricky kind of thing to do. And most people are not able to do it. So if we talk sectors and asset classes, I think precious metals will outperform real estate and stocks, and probably to a certain extent, Bitcoin and cryptos will be able to outperform gold and the precious metal sector.
Now, some people are talking about a stock market crash sometime soon, maybe sometime later this year. Your perspective is the stock market will just keep running. Why don't you see the possibility of a crash soon?
Again, I mean, volatility can always happen, and it can be that you get a mini crash for a few days. That's what we've seen over the last 15 years. a few short, quick mini crashes, everybody's freaking out, and then 3 months later, stock market back to new all-time highs, right? That's basically what's been going on since the financial crisis. And I don't see that this will change, because what would have to change is basically the behavior of the central banks. If they stop expanding the balance sheets, if they stop literally printing more currencies, yes, everything will crash within an hour, and you will have several more tomorrow morning, or maybe this night. But exactly that's why they won't do it. They might try it at some point. I mean, they tried it the last time in summer 2019, and the result was the repo crisis. So I don't think that this will be possible anymore. Mini crashes can happen, yes, but I think a big crash, no. You want to be well diversified over various asset classes, obviously. I've always been recommending having at least 10% of your net worth in physical precious metals. If you want to go up to 25%, I think it's good too. It's justified. Holding some stocks or a basket of stocks, I think makes sense too. You want to be well diversified in this kind of scenario. And the cracker boom actually describes this kind of like distorted, illusionary reality. And it's very difficult to really understand what is now outperforming what. And it's always going to be cyclical as well. And it's going to be volatile. So, but understanding that, not playing around, because if you sell out of your investments right now, where do you want to go? You want to go in fiat money, in paper money, in dollars and euros, and then again you have the same problem again tomorrow. Where do I put my money? Because it's going to be losing purchasing power, right? So I think the best answer really is stay invested. And if you don't have enough experience, don't use leverage. Go especially for the physical precious metals, and then you should do well.
I think that's a good point. Like, yeah, during a crack up boom, the worst place is currency, fiat currency, because everything else is rising. So the value of the currency is falling. Now, before we let you go, I wanted to get your perspective on investing in Bitcoin, because I know that that's a big thing that you focus on. Now, when investing in Bitcoin, do you kind of trade the ups and downs, or do you hold for the long haul?
I mainly hold for the long haul, but you can obviously use some exit strategies, especially if you need to, or if you are in the position that you want to enter the market right now. Of course, the risk reward is not as good as buying Bitcoin last summer below 10K. So you have to be a little bit more careful. We also know from the past that pullbacks of 30, 35, even 40% in a massive bull run in Bitcoin are happening, or have been happening in the past. So that's something you need to put into your planning, basically. So I would suggest if you want to buy into those markets, first of all, unless you have already a lot of experience, then only do it in small position size, small, little, even maybe baby steps. I mean, I started with $50. That's what I invested the first time when I bought Bitcoin. And I did it a few times until I really gained confidence of what I was doing. So that's the first thing I would recommend. And the second, yes, if you have a nice continuation of that rally and you bought in at levels above 50K, above 60K, yes, take some profits along the way to reduce your average price that you paid, basically, and then it's much easier to sit through, because I think this is going to be a volatile ride over the next few months.
And long term for Bitcoin, I know you were on another podcast, Cambridge House, and you were talking about how Bitcoin could be the world reserve currency of the future. So really, what do you see for the potential for Bitcoin in the long term?
Yeah, I mean, look, nobody knows the future. I don't know it either, but I think it's obvious that the legacy financial system is not really working anymore. I mean, it's only still in place because they've been expanding the currency supply massively on every corner since 15 years, basically, or let's say 13 years since the financial crisis. And so there has to be something new at some point. You cannot repair a broken system. And I'm very open-minded. I'd love to hear new ideas, but so far the only thing that I see that could replace the system that we have right now is Bitcoin and the cryptocurrency and decentralized finance, especially. So you want to be very open-minded. Nobody knows how it exactly will play out, but I think the chances are very good. I think the regulators are way behind when it comes to Bitcoin. I think there are so many factors that you need to consider before believing that they could stop Bitcoin. I don't think it's really possible. Today, I think Turkey banned Bitcoin, but let's see. So far, the market had just a mild sell-off. If Bitcoin goes to 65,000 in the next few days, you know that, the market didn't really care what Turkey decided to do. So it's going to be very interesting, and you want to be part of it. Just don't chase it and try to run behind this train. I always recommend also to just keep some low buy limits in the Bitcoin market and wait if the prices pass by and fill your order, basically. And because psychologically, this is creating a lot of stress. I know a lot of people with a lot of money, and they all sitting there and watching this Bitcoin train, having left the station, and they don't know what to do. And if they start measuring their net worth in Bitcoin, the picture is getting rather unpretty, I would say. So you need to take this serious. Don't be afraid of it. As I said, baby steps is always a good start into that sector. Taking some partial gains if the thing moved in your direction. And being open-minded, I think, is one of the most important attitudes that you need when it comes to Bitcoin and cryptos.
All right. Well, Florian, we really appreciate your time today. If people would like to hear more of these interviews, they can hit the subscribe button and the bell icon so they'll be notified when we have new interviews coming out. And before we let you go, where can people find you online if they're interested in learning more?
Yeah, my website is midastouch-consulting.com. We have a free Telegram channel where we share all our research. We have very good international discussion going on. It's a place where people from both parts, basically from the precious metals as well as the cryptocurrency world, are meeting and helping each other. So it's free. I welcome everybody there.
All right. Florian, once again, thank you so much for your time, and God bless.
Thank you. God bless. All the best. Thanks.
Physical silver and gold in your hands. Personal service, competitive prices, and zero complaints. That's Miles Franklin. Call us at 1-800-822-8080 or email us at info@milesfranklin.com.